Hello friends. Today I am going to discuss about IPO, that is initial public offerings. Is IPO really an IPO? No, they are structured as offer for sale for monetization of promoters shares and other PE or VC shares. But what is the difference between IPO and OFS? In IPO, there will be an increase in the number of shares. So dilution happens. But in OFS, dilution does not happen, but promoters sell their shares. And also in IPO, whatever they are access to the funds from the retail investors or institutional investors from IPO goes to the company's growth or expansion or innovation of the company. But in offer for sale, the money raised goes to the pocket of promoters or any other alternate investment funds invested into that company. And why these VC or PE companies wants to exit? Because they have taken the risk in investing into the company. PE invests in a lot of mature companies which are unlisted before, but VC invests in many growth stage or seed stage, early stage companies, and they experience more risk compared to VC. Sorry, PE. And also the liquidity is also very less. They can't exit from the company within 3 to 5 years. They have to wait for 5 to 7 years to get the amount they invested into the company. And also, your rate in startups is very high. So not all the companies will get listed in stock market or primary market. So they want to encash the opportunities from these IPO companies so that they are going to invest in other startups so that their portfolio companies is going to rise. And also they P and VC have control over the management of the company, and also they will help in strategizing in the governance and mentorship of the company. And then let's discuss about the science of these IPO companies before they listed in the stock market. Their loss is going to reduce, and they expand the retail outlets, and then they make aggressive marketing of their products. And I observed some of the issues of these IPO companies. Recently, many companies entered into primary market in India, like LG Electronics. They come out with 11,000 crore IPO, and all those cash went into the pocket of promoters. And also Grow, Lenskart IPOs listed in this year. There are some issues like huge valuations, and then the clouded future cash flow, and then they're not making any profit. The unit economics is very bad. And also these anchor investors like these companies shares so that they can cash the invested amount. But here retail investors are going to suffer more, because when these euphoria subsides, fundamentals like ROE, ROC, net profit, cash flow, these fundamentals become more important than the narratives set by these companies. Than the narratives set by these companies. Now, let me discuss the practical, mathematical case of this IPO and OFS. Let me consider the company called Intrepid Q. This company has a valuation of 1000 crore in 2020, and its promoter had 10% shares in that company, and it was valued at 100 crore. And now in 2025, the valuation rised to 10,000 crore. Valuation depends on the multiples of annual recurrent revenue. Now its share value raised to 1000 crores. The number of shares remains the same, share percentage remains the same, but worth of the shares is going to be raised. Now in OFS, promoter decide to sell his shares, maybe 5% of his shares. So dilution will not happen, but other alternate investment funds could access to this capital. But in IPO, number of shares is going to be rising. Let's consider initially that company had 100 shares, it increased to 120 shares, and this promoter had 10%, that is 10 shares out of 100. Now his number of shares remains the same, but the share percentage is going to be reduced to 8.33% because number of shares, total shares increased by 20. This extra 20% what this company is rising from the IPO. Thereby, the value of each share is going to be raised, but number of shares remains the same. We have to remember that. Thank you.